Hello friends, myself Manoj Gupta, and today I am here to discuss with you a very latest provision of GST, Anti Profiteering measure.
As we know, the draft GST law released in November 2016 include a provision of anti-profiteering measure in clause 163 which enable the central government to constitute an authority to monitor the prices of goods and services. With the introduction of GST, the benefit of extra tax input credit or lower rate of tax in certain goods or services will result in reduction of cost price of that product or services. The authority will examine that such benefit of reduction in cost price is passed on to the consumer in the form of appropriate reduced prices. The provision of clause 163 is as follows. The central government may by law constitute an authority or entrust an existing authority constituted under any law to examine whether input tax credits availed by any registered taxable person or the reduction in the price on account of any reduction in the tax rate have actually resulted in a commensurate reduction in the prices of the said goods and or services supplied by him. This can be easily understood by an example. Let's say Mr. X, manufacturer of cement, sells his product to Mr. A, the wholesale trader of cement. In the hand of manufacturer, the cost of cement bag is rupees 100. Let's say the margin of Mr. X is 10%. Rupees 10 total rupees 110. Rupees 11 as paid excise duty. Total rupees 121. On this amount, sales tax of rupees 12.5% charged, that is approximately rupees 15. Now the total is rupees 136. Mr. X sell the cement bag to Mr. A for rupees 136, in which rupees 11 paid as excise duty, rupees 15 paid as sales tax, and rupees 10 as the profit of the Mr. X. Now, in the hand of Mr. A, the wholesale trader, the cost will be rupees 121. Rupees 15 paid as sales tax will be eligible for input credit, hence not included in cost. Let's say the margin of Mr. A is 10%, rupees 12. Now the total is rupees 133. Excise duty nil. Total rupees 133. Now sales tax 12.5%, approximately rupees 70. The total is rupees 150. Now in the hand of consumer, the cost of the product will be rupees 150. After GST, the cost in the hand of manufacturer rupees 100, margin rupees 10, total rupees 110. Let's say the GST rate is 18%. The GST will be rupees 20 approximately. The total is rupees 130 in the hand of manufacturer. In the hand of Mr. A, the wholesale trader, the cost will be rupees 110, as rupees 20 will be eligible for input credit, hence not included in the cost of the product. Now the margin of Mr. A is rupees 11. The total is rupees 121. The GST at the rate of 18% is equal to rupees 22 approximately. Now the total is 143. Now you can see that before GST, the cost of product in the hand of consumer is rupees 150, and after GST, the cost of product in the hand of consumer is 143. The total benefit to the customer is rupees 7. Taking the same example, there is a scope in the hand of wholesale trader to increase its margin from earlier level to meet the same cost of product as it was before GST in the hand of consumer. Let's say the cost in the hand of wholesale trader is rupees 110. Now he increased its profit margin to 15%. The margin is rupees 16 rupees 50 paisa. Now the total is 126 rupees 50 paisa. The GST at the rate of 18% is rupees 23 approximately. Now the total cost is rupees 149 rupees 50 paisa, which is similar to the earlier price in the hand of consumer before GST. You can see that the wholesaler trader increased the cost of product in order to prevent any rise in price of commodity after GST implementation. The central has proposed an anti-profiteering measure to ensure that trade and industry pass the benefit of reduction in tax rate to the consumers. Now come to the provision. Clause 163 provides that the central government may by law constitute an authority or entrust an existing authority constituted under any law to examine whether input tax credit availed by any registered taxable person or the reduction in the price in account of any reduction in the tax rate have actually resulted in a commensurate reduction in the price of said goods and or services supplied by him. What is the implication of the anti-profiteering measure? The provision clearly indicates that in case a business registered taxable person avails any benefit under GST due to availment of extra tax credit or due to reduction in tax rate, such benefit has to be passed on the consumer. For instance, a dealer who buys excise paid goods from the manufacturer does not get credit of the excise duty when he sells his goods under VAT. Under GST, such credit shall be available, leading to saving at the hand of such dealer. The Act proposes that such savings cannot be retained by the business units, rather they shall pass it to the consumer. What if a business unit trading in goods which were earlier taxed at 12.5% and post GST they are going to be taxed at say 5%? Do they need to reduce the price of products? Yes. The clause also provides that where the business unit is saving due to reduction in the tax rates, it has to compulsorily reduce the price of their product to the extent of such reduction. This will result in same profit margin pre-GST and post-GST, leading to cheaper goods availability with the consumers. Does this mean that whatever a business unit save from the tax part has to be passed on? No. The law does not make it mandatory that exact saving has to be passed on, but it says commensurate to the reduction of the tax rates. If there are any other cost which the business might have to incur post GST, the same shall be adjusted when new prices have to be calculated. Is section 163
applicable only for transitional period? No. The provision of section 163 has been deliberately kept out of the chapter covering transitional provisions, which means that every time there is a reduction in the tax rates or any benefit is derived by the business unit, the same has to be passed on to the consumer. Difficulty in implementing anti-profiteering measure. There are several implementation challenges in enforcing such provision. The government will need to come up with detailed guidelines on the mechanism for computation of benefit, like who will undertake this task, how it will be undertaken, when it will commence, when it will end, and why it is necessary to add an additional compliance burden on Indian businesses already struggling to keep pace with the preparation for the introduction of a GST. There will be major chances of conflict between the SSC and the department regarding the computation of the benefits, because there may be other factors for increasing the prices of the product or services. For example, whether the profit has to be computed at the product level or the entity level. Do we do this analysis for each of the costs or only the major costs? Malaysia also introduced an anti-profiteering provision along with the introduction of GST in April 2015. However, it led to widespread litigation and was found to be administratively difficult to implement. Conclusion. A registered taxable person engaged in the supply of goods or services may map all transactions by comparing price variances on account of change in tax structure. The mapping may take into account applicable taxes under the existing laws like central excise duty, VAT, CST, anti-tax, service tax, as well as under the proposed law CGST, SGST or IGST, keeping other factors constant. Wherever possible, the transaction mapping for goods should be maintained at product level using the cost accounting records. A detailed analysis of price change on account of uncertain factor like currency demonetization, inflation, seasonal price fluctuation, etc., and its impact on the company's pricing policy may also be undertaken to justify increase in net profit margin, if any. It is also advisable that an SSC migrating to GST regime identifies and quantifies input taxes that are not eligible as credit under the present regime. Such data may help SSC to demonstrate why price of their goods or services have not been reduced even after additional input tax credit eligibility or reduced tax rate under GST regime. It may not be practically possible for a business to have one-to-one correlation between procurement and supply of goods and services, particularly the input tax credits on common input services. It is therefore desirable that the industry make representation before the appropriate authority to consider the following points before enforcement of anti-profiteering and price control clause in GST law. The law should allow an SSC to demonstrate group, division or business vertical wise net margin rather than for individual. There should be flexibility for demonstrating profitability in percentage term and not in absolute value. Any price variation pre and post GST on account of additional input tax credit or reduced tax rate alone should trigger penal provisions. Any increase in net margin that arises after adjusting price for additional input tax credit or reduced tax rate should not be viewed adversely. Any increase in net margin for reasons and circumstances beyond the control of business should not be doubted. The 10th GST Council meeting, which concluded on 18th February 2017 at Udaipur, has approved the Anti Profiteering measure as illustrated by Section 163 of the revised draft of Goods and Services Tax Law. Thanks for watching. Please subscribe my YouTube channel all about taxation.